as a young venture capitalist, you see these and you're like, God, they got revenue. It's going really fast. They're rolling up people. And what you realize is, they're like $50K pilot. If the product doesn't really knock it out of the park, then, those pilots just go away. It's a bit of an empty shell game.
This is what's happening in AI right now. A lot.
More or less. Is it no or is it yes? We'll debate the text that's best when we get more or less. Dave and Britt plus Sam and Jess. Put it all right to the test. More or less.
Well, hello, everyone. Welcome back to another episode of More or Less. I'm your host today, Britt Morin. Jess and Sam are gallivanting around the world like they do. And so you've got me today in the hot seat with my partner, Dave Morin, partner on multiple fronts, that is, as well as one of my favorite co-investors and one of the greatest legends in venture capital, Tony Conrad. Hi, Tony. How's it going?
Oh, wow. I feel like Deion Sanders' son prematurely putting legend up on the board, but I'm doing well.
We're big Coach Prime fans around here, Tony. So
legend's euphemism for old, just so you know.
I was doing my, daily Carta report reading this morning, and there's a new report about the state of seed venture. And True was ranked in the top 10 boutique firms that are doing the most deal making this year.
Can you really call these guys? Can we call True boutique? Come on.
They counted boutique as anything under 500 million AUM in a fund. So we'll talk about that in a minute. But for those of you who don't know, Tony Conrad has been around the Valley for decades. You might have actually first known about him if you're as old as us in the About.me era, perhaps. I feel like I still remember the photo of you from that era. And over the last almost 20 years, I think, at True. Is that right, Tony?
Yeah, I've been there from the very beginning.
Yeah.
With John and Phil and Tony and
he's made
characters.
Some legendary investments with his team in companies that range from satellites to coffee to treadmills to software. So we've got Blue Bottle, Peloton, ISI, WordPress. What am I missing, Tony? There are a lot of other good ones in there.
There's lots of fun stuff, but a lot of those are done by my partners for sure. And as you know, we strive to be a non-attribution firm, although everybody internally certainly knows who does the deals and who's working on deals, and founders definitely have a dedicated person. But we have a tendency just to think that, one success is kind of built on the backs of a previous success. Right. It makes it easier for you to win the deal. And what role does that play? And so anyways, we tried to do non-attribution.
Do you think that's becoming more of the norm or less of the norm? Because
I think it's less of the norm. I think it's always been less of the norm. But listen,
the trend line's going down, not up.
Here's like a simple analogy, right? So we all know open source from, which is now, 20, 25 years old. And if you think about one of our earliest investments, and one that I did lead on our behalf with Phil and Tony in WordPress or Automatic, what role does that play in us winning MakerBot, which was also open source, or the latest open source company that we're in today? This stuff just all builds on top of each other. And so you got to be careful not to drink your Kool-Aid and think you're the greatest. And especially if you're working under an amazing brand, which I think True is, or one of the other many amazing brands out there in our community. It's just you have to be intellectually honest. Yes, your hustle does source deals and you do have to make the call, but ultimately you win these deals often because of the body of work and the reputation of the most important brand, which is not the me brand, but the us brand.
I love that. Offline strives to be like that. We're only 5 years old as a fund. And so here on More or Less, even though Slow, where Dave and Sam were at before, is 10 years old-ish, 10 to 15, depending on when you start counting Dave. It's not as old as True. And I think there's something to being able to have seen a lot of these cycles, which you have, Tony, that will be very informative today in our conversation. I guess just to pick up there, when you were first joining True, was John and Tony and everyone aligned that this was the type of fund you wanted to build? Would you say 20 years ago, that same
Absolutely.
kernel of that mission and the framing of exactly where you're going to play and how you're going to do it is the same as today?
Yeah, I think what's remarkable is how consistent the strategy is around the business model of what we do. And then I think culturally, you never know how it's going to play out, and it's hard to really kind of project on what your culture is going to be. But you do put in place a bunch of seeds that hopefully grow up and kind of show you what the garden looks like. and then if you like it, you're like, okay, let's double down on that. And that feels right. And I would say that when we first got together, we'd all kind of come out of this very difficult 2000 bubble bursting moment. And you got to see a lot of the real behavior, partnerships and individuals, and just, the old adage, when things are going great, everybody's in a good mood. But as soon as it gets a little gnarly, the truth kind of comes out. So we'd seen that, and we'd seen that behavior with people that we had worked with in the past. And that was something that really kind of bonded us from day one. Like, we do not want to repeat that. Like, that is not, I never want to be doing this for the money. Like, we should talk about Meta at some point in time in the departures of these executives.
We've got some hot news takes from the week.
Yeah, but doing things for the money as opposed to the joy, right, and the teamwork that you can get in a venture firm, that's always that's a mistake, or at least I think it's a mistake. And so we tried not to repeat that. And I think we've done an amazing job. We have not been drama free. We've had our own, you wouldn't know it from the outside, because I think we are a fairly drama free group. We've had challenging moments just like anyone, but for the most part, I think we've gotten it right, probably 99% of the time. And that's probably the thing we're collectively most proud of. I mean, yes, the results are all good, but it's kind of the type of firm we are and the kind of partnership that we are, that I think, at least for this kind of stage where I get to be a little bit more reflective about the past, that's the real joy, that you take.
Are there core values or principles that you think have maintained that joy?
Not
do the
written
incentives
down.
Are there sizes, like fund sizes? Are there things that are like,
especially
what's the
in the age
code?
of AI, Tony? What fund sizes should we be building right now?
Oh my God, we could talk about that, because we, even we feel like paupers out there at this point. No, I don't think. I think we do have like business model stuff that I don't know if it's written down per se, but it's certainly, if you go back to our original, LP pitch deck, would be very consistent with what we're doing still today on a business model. I think in terms of like the values and stuff like that, to run the firm and be a part of the firm, we've never written that down. We don't have some, like, you don't walk in the office and see some North Star. By the way, lots of companies do that. I think it's great that they do, but we haven't needed to do that. I think it's so ingrained in the way that we think is the true way, for us, that we just all instinctively know to be respectful and replace words like I with us. And, by the way, we all get it wrong. I say me a lot, and I'll say it, I'm sure, on this podcast quite a few times, but, for the most part, we all understand the spirit that we're coming at this from.
And for those who don't know, Tony, I mean, I know you and I are involved. I feel like I see you multiple hours a week these days.
That's a great thing for me.
Several co-investments together and boards and all kinds of things, whether it's Autos, which is, helping new entrepreneurs automate their new companies with AI.
That company is so exciting, Autos, isn't it?
So cool. Yeah. I wish it was around 10 years ago when I was entrepreneuring.
Yes.
But for those that want to start now, yeah, Autos is your co-pilot for your startup. Almond, which is, vertically integrated OBGYN care, very modernizing a really archaic category. And we also have Boomo, which is providing on-demand childcare, one of the most important things in the world, I think.
Which is just an old school marketplace. And
I'm like, there's not much AI here other than helping them automate the operations of the company. But it's just growing like a weed. And
it is amazing.
I love working on that with you.
And when you have the right kind of catalyst or protagonist, which we do there with Joan, it's just amazing. I mean,
Yeah.
it's just really amazing to see how quickly it's growing.
Tony, how many other portfolio companies are you involved in where you get to see like the same partner from another venture firm as often as you've seen me?
Well, you're the only one that took the invitation. Everybody else declined. I have a couple. You go through periods where you just work with people a lot. And I've worked with Lee Fixel from Edition quite a bit. I worked with Brad Feld in one period quite a bit. And so you're the new Lee Fixel in my life. And
I love it.
I love working with you, and I love working with like-minded partners who are, once again, no drama. Things go south in these companies all the time. They go sideways. And it's like, okay, can you fix it or not? And if you get to a point where you can't fix it, then you got to move on, and the founder needs to move on as well.
I want to share just a little insight about Tony, again, for those who might not know him or know this of him. But one of the founders that we work with had her home burned down in the LA wildfires, and everything was kind of gone to hell. She's got little kids. It was, terrible. And of course, she's drilling, working on her company. And Tony came to me and was just like, Britt, we got to help her. We got to just do something. And so we put together, something that was, I think, a life-changing thing for her. I won't go into details on what that was, but it was Tony who really initiated that and was the one to want to put that together, wanted to get the two partners on board. And I was really inspired by you and that move there.
Well, I think we so forget about the EQ piece of this equation. And ultimately, I think it's the most important thing that you have to develop, as a venture capitalist. I think the IQ, the table stakes of IQ are pretty clear. Like, I think you got to be not patting ourselves on the back, but I think you got to be curious. You got to be smart. You got to be capable to decode things really quickly, look for pattern recognitions and all that. But, once you get beyond that, I think the difference is how do you show up? And, you're not a victim. These things are not happening to you. They're things that you have to take accountability and ownership of and understand where your role is. And so in this particular case, as investors, the company had money to get out another 15 months, I think it was. And they had just in December, it was amazing. They just announced, they just had their best. I mean, every single month was growing, right? And they just had their most incredible month in December of 2024. And then the fires happen in January, and it's in LA, and the company is centric, that's geofencing in terms of its distribution footprint was in LA. And so they just got hammered, as you can imagine. And all of a sudden, the founder who thought they were going to go out and raise money in the spring, there's just no way that they could go out and raise money in the spring. Like, they have 2 kids and schools burnt down, their houses burnt down, their community's gone. It's like, give me a break. Like, and so we just took a step back and thought like, okay, what would be this company's going to lose 3 to 6 months. Maybe we can buy them back that 3 to 6 months, even though we don't need to. And we could have strung it out into the very end. But like, why? Like, what, you know what I mean? It's like, are you in this together? And it's a relatively small check. And we saw, and I think, in this case, Britt, we'll be able to write the last chapter on it because we saw what that did for the founder. We saw what it did for the company and the position of the company and its morale. And it's just, they're back and they're now double. I'm so happy to say they are double what was a record December. They're now double from that point here in September. Although we're not in September yet, so I'm already counting. I'm doing that venture capitalist thing.
I know, yeah. We're rounding up a little bit.
I'm rounding up already for just September.
This is called VC math. No, I thought it was really special. It also highlights to me why there's all this talk about AI, and LLMs taking over the job of a venture capitalist and getting really good at picking and allocating and all of these things. And I'm just like, what you just said, the EQ component of this is like so critical because it's a human, it's one of the most human jobs, right? Dave, to reflect, you saw that all happening. Obviously, we talked about it at Offline. And we've had a lot of these other incidents with our own founders, wouldn't you say?
Yeah. This is a deeply human business, right? Being a founder is incredibly lonely. It's very difficult. Those of us that have been through it know this. And I think that there are any number of things, I guess maybe the worst of which is your home and entire community burning down on the one end, but there's just an enormous number of things that can go wrong that are all human, right? And I think that a big part of the venture job is to actually show up as a human and to actually be there, help founders, whether it's helping them through their own traps in their own thinking, their own sort of internal struggles, to their, social and community struggles, to these types of things, right? Like, it will kill the company just the same if the human breaks down, right? And so, I guess that's always been
if you operate from fear, I mean, it's wow.
Yeah.
I mean, it's the difference. Like, if running up a hill is hard, right? But run uphill with weights or with like a band around you with your trainer, dragging them up. Like, that's what that's like when you're starting to operate from fear, right? It's that level of a challenge as opposed to just the normal challenge. And I mean, I've always appreciated you've been always so open about the mental health aspects of this profession. And you and Brad, I think should be applauded as being two of the first that were the most public about your own journeys. And I remember seeing you talk at the Battery once, and I thought, like, okay, Dave's the kind of investor I want to work with. And I remember, like, we started doing some stuff after that because I thought, like, okay, you got it. You understand the bigger picture of what we're trying to do here. Which is, I mean, yes, we want to generate outsized returns and all that stuff, but like, boy, it's just so much more enjoyable to do when everybody feels good about their role and having done so.
Yeah, for sure. Tony, what other firms or GPs are you most inspired by as you continue to grow in your
I'm
venture
actually
career?
right now super inspired by some smaller firms. And well, I should actually, this is kind of a good moment because I'm actually also inspired by, it's almost like the barbell of this. Some of the legacy, what I'll call legacy firms, which we're starting to be a part of as well. And just to see how they have gone through significant partnership transitions and probably, focus transitions and all that kind of stuff. And like Index, amazing. I'm so happy for Danny Meyer and the team over there with Figma. And like, I've known Danny for a long time, first worked with him and Volpe on
one of my investors at Index was one of Dave and my investors. Dave worked with Volpe. I worked with Danny.
Volpe was one of my biggest mentors. I don't know if I've learned so much from them, and we also have James Higa over here at Offline now, which was part of Index for the whole 2010s, right?
And I love James. He was so helpful on Blue Bottle. But, so I have like a renewed appreciation for some of the firms that have been around. Greylock is another one of these firms where I think, like, probably, by the way, if we went and we looked at their results, they probably have always just been really like this. But, like, my perception is like, oh, they were like top of mind. And then, they're definitely top of mind, but a little bit not so much in the forefront. And then, and then all of a sudden they're like back. And I love seeing that. Mamoon, the work he's done over at Kleiner is, like, to me, incredibly inspirational. I mean, I felt like Kleiner had really lost his way at one point in time. And honestly, in some weird way, it kind of saddened me because they were such an important firm in my own kind of journey. And so many of the partners there were so just incredibly helpful from a mentorship position in the beginning of my career. So, anyways, but like, that's great. But I'm really like Robbie, who I don't even know at Modern Technical Fund. I know a bunch of my team members know her, and I'm just so like amazed by her hustle and by her intelligence and her deal flow and just, we're working with her. She's one of our co-hosts. She does a lot of enterprise AI stuff. And so we have a conference coming up September 10th, which I know you're coming to, Britt.
I'll be there. Yep.
called The Connected Stack, and they're one of our co-hosts. And,
Cool.
it's amazing because you got Sequoia, Kleiner, Index, Andreessen, you get all these like amazing big firms, and you got Modern Technical Fund. And then you got Sarah Gao's fund, Conviction, which is really quickly, has moved up into the forefront of everybody's, list. I'm really impressed by that. I've been really impressed by Kirsten and her team over at Forerunner.
Love Kirsten. She was going to maybe join us today, but she's going to come for a future episode.
That's all right. You'll get her. Yeah. She's phenomenal. I don't actually know Kirsten very well. I've met her a couple times, but my partner John works with her on a number of things, and then just her graciousness in the way that she's helped us to do this Connected Stack, event, which is very much modeling after what they had done with Humans in the Loop in June. So, just lots of, we're lucky, we're lucky to be able to work with some really thoughtful, amazing, kind-hearted, but ambitious people.
I agree. It's one of my favorite parts of the job. I'm on a board with Kirsten as well, and she's also a friend outside of venture. And just getting to spend a lot of time in the trenches with people you like is like, there's nothing better than that, right? Whether it's a founder or a co-investor.
I know it always confuses Mary, my wife. You guys know, but for those up there, always she's like, so you're friends with the people you work with and partner with? I was like, yeah.
And I'm actually married to one of them too. Yeah.
I mean, it's actually, that's the unfair advantage. That's the unfair advantage, right?
I'm happy somebody else is getting a front row seat to why Brit is awesome. That's
really sweet of you. Well, you two are two of my favorite men in the industry. So well done, Tony and Dave. Okay, a little bit of a hot takes news of the week I want to get to, and then after that, Tony, I want to get your broader thoughts on what the fuck is happening in the world of venture, AI, technology. I also know you love brands and like just amazing brands, and I think we're having a new like brand 3.0 or 4.0 moment. So I want to come back to that too. But Dave, you might want to spill the Starship news, because I know that's a thing that you've been super psyched about this week as one of the hottest news of the week in tech, and why it's so monumental for the industry.
Yeah, I mean, I was watching the SpaceX launch yesterday with great trepidation. We've done a lot of space investing. I don't know if you know that, Tony, but both James and I we're doing a lot of space stuff, and we just did a really interesting space energy investment with Baiju, who was the former founder of Robinhood.
Oh wow!
We worked on Robinhood for many years. We were early investors there, as was James and Index. And then Baiju's got a new startup, and he's focused on capturing the energy of the sun and then beaming it down to Earth using infrared lasers. But the enabling,
as one does, obviously,
the enabling technology for this is actually Starship, because in order to build a satellite big enough to achieve this, you actually need a bigger volume, and the Falcon can't get the volume of satellite into low Earth orbit that you'd need to make a viable business out of this. And so we were watching yesterday with, great anticipation, because if it was able to, achieve the tests that they wanted to achieve yesterday, it was going to be a big deal to these types of models. And they actually pulled it off. So they got Starship into orbit. They deployed a bunch of test satellites out of the cargo bay, and then they got it back to Earth and perfect splashdown in the ocean. I mean, it's pretty amazing to me that SpaceX can land a rocket like at the exact point on Earth that they want it to land at, and have a little drone buoy out there that captures an image of it perfectly.
But that starts back with Apollo, with Apollo 11, Apollo 9, the reentry is, that always blows my mind. Like, you've got to like whatever.
It's amazing. And so it's just cool. I think it's very inspiring. It's always inspiring to me to watch these things and think about what's possible to do in technology that humans are doing this. And while at the same time wearing a venture capital hat and saying, these are incredibly capital intensive engineering projects, but there are interesting unlocks happening. So I'm psyched that the tests seemed to work quite well yesterday. There's obviously still more to do before this thing becomes reusable. But
what do you think the unlocks will be?
New platform.
What do you think the unlocks are?
The first one is, you're just going to get larger masses into low Earth orbit. So you've got a new platform for a different scale of satellite. So different electronics bundles, different sensor bundles. You're able to do more. Now, there's a bunch of other things that are, people are pontificating about Mars, and, we're going to be able to go point to point on Earth traveling and all that stuff.
Take more people, bigger container. It's like it was like a 400-foot stainless steel container, right?
Yeah. So all that stuff's great, but the practical, space market reality is that you're going to be able to get new bundles into various different orbits of larger mass and size. And I think that's exciting. It just means there's a new platform unlocking pretty soon. Like until yesterday, people were, I guess there were two camps. There was the camp that said Elon never gets to anything on the timeline that he says he's going to. And so who knows when these things will stop exploding, right? And then there's the camp that's like, no, actually SpaceX does iterate and get there sooner or later. And so there is this new platform coming online. And I think yesterday was a pretty strong signal that, you can start investing in this new platform, and you're probably going to see it in the next 24 months.
Tony, do you guys do a lot of space investing, space tech?
We've done two things. So ISI, which is a phenomenal company that does satellite imagery, and one of my partners works on that deal. And another one of our venture partners actually had sourced that deal for us back in the day. And I think ISI is like an amazing company. If you think about what's happening in the geopolitical environment around the world, not everybody wants to work with SpaceX. And by the way, SpaceX and ISI work very closely together. They're deeply integrated partners. So that's not a knock. But I think that other governments outside of the US definitely want to get their imagery from maybe a non-US company for obvious reasons. And
it's a non-US company?
Yeah. So it was founded in Finland. Yeah.
Oh, okay, cool.
And it had, you always think you've got a handful of these deals in your portfolio that could be the largest deals ever that you've, been a part of. And ISI is definitely one that we're feeling crazy good about.
And you source this from Finland with a venture partner. I'm like, should we be going to more trips to Finland, Tony? Are there more deals to hunt there?
They have that conference in December, I guess, Slush or whatever.
Oh, I think Sweden seems hot right now too. I feel like we need to also hit up all the Nordic countries.
Here's what I will tell you. I've always said this internally. Venture is a contact sport, literally. Mm-hmm. Like you have, and this is where we all lose the hustle as we get really successful and blah, blah, blah. It's like, well, do I really want to swing by that cocktail party at Calibri at 5:00 today? What's that going to change? Whatever. You got to do it. I tell our younger team, if you're not out at least 3 nights a week, then you probably shouldn't be doing
sales
this.
At the end of the day. Yeah. It's sales, networking. Yeah.
I learned
caring
that from?
About things.
I watched Ron Conway do that for years.
Oh yeah, he's the master.
We all learned that from him.
20-minute visit. You know what he does? He'd walk into a room. He'd go. It wasn't about meeting new people. It's about solidifying his relationships with the people he knew, and then maybe picking up 1 or 2 new people that would follow up with him outside of that. That's really it. And he just was a master of it. He'd walk right in and say, "Hi, Dave. Great to see you. Hi, Britt. Great to see you. Hi, Tony. Great to see you." It was just like a politician in the best way.
Greatest of all time.
Whatever. Just amazing. I learned that from him. Yeah.
Huh. I love these little anecdotes. We want more of these. All right. So I would imagine we're all pro space tech then. It sounds like, yes?
Yes, we are.
Okay.
We are. I think there's going to be a lot of experimentation that happens because you got zero gravity and, what are the kind of things, that we can learn about, even our metabolical selves, in these environments and what type of, I don't know. Like I just think there's going to be an amazing amount of R&D that happens in space because of the zero gravity aspects of it.
Yep.
Yeah.
I think that's
exciting.
a market that is really primed to happen.
I don't want to, I guess, give away, or maybe I should give away one of my secrets, but I think quantum sensing and quantum communications is a really interesting zone right now.
Yeah.
And studying it in a vacuum in space is actually really the best way to do it. So I also think there's a lot of big unlocks in that zone as well, but totally agree with you on that.
Yeah.
This is like feeling like real venture capital versus what the fuck's happening in AI, Tony? What are you thinking? We talk about this. This is like an ongoing thread on the pod. If you haven't listened much, Sam is not anti-AI. He's anti there's any money to be made within AI, and
Well,
that is
he's
all
wrong
going
about
to the
that.
incumbents. So yes, while he's out, why don't you defend what you just said, that there is money to be made with
I mean,
AI?
we have
Dave
one-
and I do
we
this
have-
every week.
We have one portfolio company that, and these are real numbers, not venture numbers. For those of you who are not venture capitalists and listening to this, you might go, what's that mean? It means we're not aggressively rounding up at all. We have a business as a very mature business, very good business. It's already unicorn status valuation that opened in December, had zero revenue around this new product line. And this year ends at minimum 150 ARR on that business line.
Is this
to 200
enterprise?
million.
But this is an existing large business that already has
It's an
customers
existing
and
large
data.
company. Yeah, it's a company that just figured out how to, shift into a void. And
How big was the business prior? Like
200 million.
200 million in ARR, roughly how many
Yeah.
customers? Just ballpark. Tens of thousands?
No, sub 1,000.
Okay.
Enterprise
It's
business.
an enterprise business.
Yeah.
Hundreds, sub 1,000 number of customers, 200 million ARR. And since December has added an incremental 150 million in
Doubled.
ARR.
This year.
Basically doubled.
They're just hit, I think, in August, 100 million. So
Wow, amazing.
they will hit it. It's accumulating, right? So I don't think the 150 is a number
Stretch.
I'm carelessly throwing out there. I think it gets closer to probably somewhere between 150 and 200 by the end of the year.
And this was an AI native business or a business that integrated AI into what they were doing? It sounds like
It's a business
to
that
expand.
integrated AI, took advantage of its unique assets to be able to play aggressively.
We're hearing
in a
this
segment
story
of
a
AI.
lot, right? That existing businesses,
I
are
disagree.
able to radically make more money or add a new business
Yeah.
line.
Here's what I
But
don't.
the new businesses,
I don't know, this business aside, I don't know what the quality of the revenue is. So you all understand, especially but you understand like ad networks, right? And so you'll see these companies that go into ad tech space, and the very first time, as a young venture capitalist, you see these and you're like, God, they got revenue. It's going really fast. They're
If
rolling
the
up
revenue
people.
churns,
And
no one cares. Yeah.
And it's like, and what you realize is, they're like 50K pilots or 100K pilots and whatnot. And so, if the product doesn't really knock it out of the park, then, those pilots just go away and they don't get renewed and whatever. And so it's a bit of an empty shell game.
I'm really glad you brought this up because I feel like this is what's
happening in AI right now. A lot right now.
We're seeing this in our portfolio. Anyone, I think, who's vibe coding anything right now sees how hard it is to wrangle these models to get them to do the thing in the application that you want it to do. And so you've got these enterprise companies they're getting a 30K or a 50K trial, right? But the product kind of does the thing that they sold, but they're also developing it in flight. And it's not totally clear to me that this revenue is high quality or going to stick around, especially if you can't really get the AI product to do what you sold it can do, right?
Yeah.
And that's a little bit of a scary thing for me in the market right now.
Well, I always get nervous when markets get pulled forward, like even like our, broad-based economy right now, like, how much of it did you get it pulled? It seems to be resilient, it seems to be doing well, but I just wonder how much purchasing power got pulled forward because businesses and individuals are panicked about the potential, tariffs. And so make that purchase right now. And then, and then when those things happen or don't happen, you've pulled forward all that revenue and, there's a bit of a, stall, so to speak. And so I do worry about that a lot. But I also, do believe that there's some monstrous, companies. Obviously, there's obviously at the infrastructure layer, there's massive companies that are being built. But I think there's going to be at the application layer as well.
Which facets of the application layer are you most excited about?
I don't know yet, to be honest with you. I think we're excited about the application in the enterprise.
That seems to be where people are concentrating, consumers lagging.
Yeah.
But
the whole concept
cautiously optimistic.
I would say SaaS is, like if you're an enterprise person, you're not saying the word SaaS anymore. That's dead. I mean, literally, you're not saying that. Nobody thinks that's hot, right? And there's these massive SaaS companies, nevertheless. So I just think everything, obviously, in the stack is getting redone and has to get redone, and so it's going to be. I think it's going to be boom time for everything in enterprise. Now, where it kind of fleshes out or plays out in the consumer space, I don't think I've seen it yet. Like, at Humans in the Loop, we saw a lot of consumer, companies and whatnot. And there was a couple that jumped out at me. But for the most part, I thought like, oh, this is really early still. I'm hoping that Kirsten and them would do that conference again next year, because I think next year, if like 1 year out, like it's just going to be like, ding, like, oh my God, it's like, when it's like, like mobile. I mean, we all understand this, like, like there's mobile and like we kind of, it just kind of,
it took like 5 years for people to
it wasn't until, it wasn't even that. It was just when GPS got unlocked, all of a sudden it's like, oh, there's these things like Uber that can happen, or Airbnb that can happen, or DoorDash. Like all this stuff can happen that couldn't happen before. Right?
And what are the unlocks then that you think need to happen for consumer AI to unlock?
I don't know. I mean, I think that's the...
I was curious if you think it's more on the technical side, like we need less hallucination, better, faster models, et cetera, or the adoption side with consumers.
Or price.
I mean, yeah, it's expensive. That's these are still expensive businesses to run. I think that's probably the biggest thing. I think you nailed it, Dave. But that comes down, as we all know, like that gets course corrected really fast, and it's already getting course corrected.
And I have to ask, in the LLM war, do you have a lead horse that you're betting on?
No, I don't think there's anything good coming out of answering that question. Which of my children do I love more?
Just saying. I mean, well, we debate if like the incumbents versus the open AIs and Anthropics, how does this all end up? Are we all going to use all of them? Does it end up being 2 or 3?
I would say, like on a personal level, because I love Mike Krieger so much, that I'm, really thrilled about Anthropic. And I think Anthropic actually has, on the enterprise side of the equation,
for sure.
I think has definitely a lead here, or at least reputationally, I think it does. And I think that's important. But honestly, I'm using ChatGPT. I just, I'm just kind of, I figured out how to be appropriately polite to it, but not too polite. It still pushes back, gives me bad answers. And I'm not worried about hallucinations and all that. I like my buddy Tony Fadell, like hallucinations, and and Gary Marcus writes all this very negative stuff about all the hallucinations. Yes, it is true, but how much is the stuff that I'm getting out of Google, inaccurate? To be honest.
Yeah, I think
this stuff gets better. it gets better
Totally.
and it gets better and better. But I will tell you where I'm really nervous about. I'm nervous about the manipulation. I'm worried about how it gets manipulated into social. As bad as we've seen social kind of turn on us, I just don't know what that means yet.
What do
I
you
don't
mean
know
by
what
that? Can you unpack that?
Well, it's where you have stuff that you're using. It's blissful in the beginning because people haven't figured out how to manipulate, right? And it's almost kind of like when once you had the influencers kind of come in, and the influencers aren't the problem at all. So I'm not like dumping on them. But once you had that, all of a sudden, like the innocence of kind of what was there for a bit, in terms of what people were espousing or promoting or talking about or enjoying or whatever, I just, it just felt like a, I don't know, innocent, pure moment in the beginning. And then
Meaning now it feels like we're just getting pushed stuff
I'm just
that's
like,
fake
well,
from influencers.
why are they? Yeah, why are
you
they
don't trust
promoting
anybody. Mhm.
Do they really
so the
love
platforms
that?
got manipulated, but also they did the manipulating, I guess.
So here's where I've been thinking about where it's, I think applicable to us, is how we think about the shift from SEO to AEO. And so if you dig into that a little bit, which is just moving from search engine optimization to answers engine optimization, the way SEO partly works is earned media, right? So you and I can write a press release and it doesn't really impact the Google results very much. It's if the New York Times picks it up or somebody reposts it or does all that kind of stuff, right? Where you start to get juice. In AEO, it's just the opposite. It is about actually putting value, disproportionate amount of value of whatever's coming from the horse's mouth, right? So whatever it is that we're putting out there. So a press release, you may not have done one lately because they were lame, it didn't matter. You need to be doing press releases now if you want to show up in the search results, right? And what's happening is the messaging that you're putting out there actually is superior to the messaging that others might be putting out there. So that's kind of pure and innocent right now, but that's really dangerous soon.
Well,
Like soon.
and not a lot of people know to do that yet too. So it's just not saturated at this point, right?
Yes. I mean, listen, if you're like a four-wall business or you have a geographical, based business, SEO is still really important. I'm not poo-pooing that.
Sure.
But for us, I think, increasingly, founders are probably going to lists and going like, who are the top 10 consumer investors? Well, if person X over here just said that they're going to show up. I just saw, I don't even know how they got this list, because we showed up on it. So great. We're happy about that. But the Time 100, top list, I think you guys were on that as well. Did you notice that Sequoia was not on that list?
Yeah. And
So,
the Midas list was, well, I guess Midas was based on data.
None of
but
these
yeah,
lists are ever right. It's never
We
right.
don't do Midas lists. this is back
you
to
opt out of it?
non-attribution. Yeah, we do
because you
not
don't have
give,
people. Yeah.
we don't give our
It's the
data.
same thing. I mean, this,
We
by the
don't
way,
want
when
that.
I was building Slow Ventures, we were non-attribution. We never submitted data, right? And so we're never on any of these lists. We do the same thing at Offline. We really are non-attribution. We don't submit data, right?
So how are you thinking of playing this, Tony, on behalf of True? Do you because you do want to show up in some of these lists.
We hired an AEO optimization firm. It's not that we want to show up on these lists.
Well,
we want people to be able to.
This is the first time I've heard somebody say that acronym, AEO. It's
Oh,
interesting.
really? Oh, you're going to.
Yeah.
I don't think there's any chance you get through the end of this year. You haven't heard it hundreds of times.
Interesting.
well, it's been a GEO, and I've heard.
There's a company that Sequoia just invested in that Kleiner, I think, originally
Profound?
led.
Is that
Profound. Try
Yeah.
Profound.
Yeah.
And I would say, by the way, happy to make an introduction.
Yeah,
I want to try
That's
it.
who I'm using. Yeah, I think you have to. And I think it's table stakes, to make sure that your information is whatever.
Showing up the right way.
Now, listen, so one of the things, with one of these groups, Not for Profile, that, they recommended we do is start generating a bunch of press releases and this, and that. And that felt so inauthentic to us. Like, we're just not willing to do that.
That's how SEO always
to game
felt.
it. Yeah,
right?
well, exactly. And so, but this is going to be, once again, SEO is somewhat dependent on, or it's very dependent on others, validating and picking up your article and all that kind of stuff. That's just not the case here right now. So I think it'll change, but I just think there's just a bunch of dangerous, kind of corners, that I'm starting to think about. And so I don't know what we do with these tools. That's what makes me really, really nervous after seeing what we did with social, which I would never have guessed in the very beginning, which obviously Dave with Path, you were thinking about from the very beginning.
None of us guessed this, right? I mean, even when I was at Facebook, we weren't guessing this, right? Like,
okay,
that's
good.
One of the things I try to tell people is that, like, what happened with social, almost no one predicted. Like, we could spend a whole hour on
Dave?
Podcast.
Because you thought it would be like way more distributed, and now there's just like one social network, two, maybe, I guess, TikTok.
Oh, I think there's more than that. There's Snap,
there's
and
X, there's I know, but like the big ones, like Snap
Is it
and
funny when we don't
X
think of
are like mediums.
I know,
small to medium.
It's a small little
That's
X.
a small social network, Tony. Exactly.
I mean, I think that the truth is social is dead today, right? There are no more social networks that anyone uses, because everything, followers don't matter, your friendships don't matter. There's no actual functional social relationships inside of any of these systems today that matter in terms of the signal that generates what shows up in front of you, right? It's all algorithmically viral. And, people just have to create an enormous amount of content, and the algorithm either picks it up and distributes it or it doesn't. And it doesn't have a whole lot to do with the social relationships in the real world anymore.
But I will tell you, social though is powerful. Still, obviously, like I'm off of Twix, and I'm off of Facebook. I've been off of all this stuff for the most part. My Instagram's private, whatever. But like, I'm surprised. I'm shocked to even hear myself say this. The social network of LinkedIn is like kind of
crazy,
amazing,
hotter than ever
and powerful, right? And like, I would have never, like, oh my God, like take me out back and force me to to post on LinkedIn. Now I'm posting all the time. So mea culpa, LinkedIn people, you're great. Thank you so much. Please don't ban me. But I think these social networks like Dig, Reddit, Dig we're investors in. And I think
As are we. Oh yeah, another deal we have in common.
There you go.
One of my favorite ironies
super excited about that
right now is that the CMO, Alex Schultz of Meta, who, I got lucky. I got to sit next to Alex when he first joined Meta. He's easily the smartest growth marketing person, like maybe of all time. Like he is the true source of truth for what growth marketing became in Silicon Valley. And he's launching a book right now. And how do I know that? Because I experience his marketing for his book about meta marketing on LinkedIn. Like I hear about Alex Schultz's book on LinkedIn, not on any Meta properties, which I find just to be gloriously ironic.
That is amazing. That is amazing.
Tony, I want to go back to what you were talking about with, building brands, basically, whether they're personal brands or startup brands or big brands in this new AI era. And I say that because I'm excited to talk to you about this, because out of all the VCs I know, you are like one of the best brand investors. I know you do some of these personally too, but things that aren't necessarily technology driven. So Holy Grail Donuts, we talked about Blue Bottle, Flour and Water. I'm sure you have a whole list of these things. Sweet Green.
Sweet Green.
Modern Animal.
Modern Animal. What are you looking for in these types of investments? Or would you categorize them as venture scale, not venture scale? How do you think about it?
Well, like in the lens that we're all living in right now, these do not feel like venture scale. Even Sweet Green, which is a public company and, billions of dollars, like just does not feel venture scale. I mean, that's like the sad reality.
So does that mean you've stopped? I mean, you've been the North Star for all of those of us that love, real things in the real world, real experiences, coffee you can taste, donuts you can eat, hospitality experience, right?
I think we've paused. And I understand why we've paused, and we needed to pause, right? Because, this kind of moment, this AI revolution moment is quite, I think meaningful and impactful. And so I just think for us as a firm, where we're not going to invest in the kind of the infrastructure, kind of layer per se, right? That's just not, those checks were already just
You're
way
a
so
boutique
beyond.
firm, right?
Yeah,
That's what we talked
like they're
about.
raising, 50 million, 100 million to start these things, right? And so like it's just not what we do. And as we're missing that layer, and we're waiting for the application layer, both in enterprise and the consumer, to kind of catch up. Like, I think it's just required us to just say, pause for a second on all things that are non-AI, because we're going to have catch up, like almost every firm, by the way, right? I mean, there are obviously firms that get to play in these big foundational models, but like for the most part, like we're all kind of playing a little bit of catch up. And so it's going really, really, really fast. I think it's a really dangerous moment in a lot of different ways, from valuations and things like that. But you got to play, and you got to play in this space, and you just got to be taking enough reps to where you're ready for when this shifts, because when it shifts, it's going to shift really, really quickly. It's almost like, like I feel like right now, even like through the most recent, ChatGPT, iteration, it all feels all of a sudden really quickly iterative, really small. Nothing
Totally.
like GPT-5. I'm like, okay, it's a little different. I'm not really sure how different it really is.
Yeah.
Me.
Yeah. We talked about this last week on the
if
pod.
you go back and you think about mobile, and you think about the early, if we use just Apple iPhones, right? You remember like the first one, like blows your fucking, like you're sorry, excuse me.
Yeah. So you can, we're explicit. We're an explicit podcast. It's fine.
Yeah.
We have Sam Lesson on the show.
Yeah. I promised my mother, and my mother's long dead, but I promised her in my dream somewhere that I'd try not to do that. But like it just blew our minds, number one. And then number two was really, really good. By the time you get to number four, I can't remember where it was, like where it was just like, okay, why am I buying another one? Because the size got a
more
little
features.
smaller.
The camera's a little better.
The camera's a little better, whatever.
Yeah, it was 4 or 5 where we hit the peak, right?
Yeah, and
that's what everybody agrees.
Every one of these cents has just been really like, I don't know, like, is it really that different? And so I kind of hope that's not what we're going to experience here. I hope that we are unlocking even more. It's just going to impact, every category, right? And I hope this isn't where it's peaking. I hope we're not at the iPhone 5 or 4. I hope we're just at 1 and looking for like the App Store to come on, like something that fundamentally changes it.
I think it's interesting that everyone feels that way. It's somewhat comforting, actually, that everyone's kind of like, yeah, it's definitely like linear progress. Like this isn't a like full out hockey stick revolution. Like I think it was maybe David Sachs or something last week I saw somewhere talking about that. We kind of learned in the last couple of weeks that actually this thing's moving linearly, and we can all kind of expect it to behave that way, rather than it's this like, totally vertical takeoff that it felt like in the beginning. And maybe that's a good thing. We can kind of adjust accordingly.
Oh my God. I mean, it's been a lot these last 2 years. Three years almost. Oh my God. Like it's been exponential. So
since 2022, it's really ChatGPT.
Yeah, November 2022.
That's like a step function change, right? I mean, you got the first 50 years. I mean, we're like in the third wave. everybody talks about it's like it's the first wave. No, it's the third wave of AI.
It's for sure the third
There's
wave.
the 50 years that preceded it up till like 2015, which are all about like theory and infrastructure, like period.
Yeah.
And then you got, the large language models, getting created in like kind of 015 to 022. And like now it's like, okay, game on. Now it's like, okay, what's this stuff all going to do? And I think so we're really, really hopefully at the very beginning. I think what's more interesting to me is something I'm thinking about. I think almost all firms, that are established and have a robust portfolio have the non-native AI companies, and then the native AI companies, and talk about like two radically different worlds of reality. There's like almost no money for non-AI stuff out there. So the rounds are becoming smaller, much more intentional, versus everything in AI is like a supernova, round. It's just crazy, like there's 150 million, 2 billion. I mean, what's the Thinking Machines, raised 2 billion
at a 2 billion
at a
seed
10,
round.
at a $10 billion. Okay. By the way,
pre-launch.
probably ends up being a great deal. Like, what I mean? Like,
Maybe,
maybe,
but there's
it's
no
just
metrics.
but it's just like, well, there's no metrics until there are, right? And so like, it's just, that's to me, the weirdest thing to figure out how to navigate. And
Do
I
you
don't
have
think
bands
we
for
know
what valuations you'll exceed or how much capital you'll put in this new era?
No, what it's more I'm thinking about it from is opposite. It's not about what capital we'll put in, because we're seed. Like we're so early. So like our stuff is bubbling up, and now we have a lot of native AI companies that are bubbling up and whatever. It's about them not getting ahead of themselves. And that's the tricky part. Like there's so much capital being thrown at almost all these companies really quickly at crazy valuations that you got to be careful. You might get what you ask for. And I think we've seen this movie just too many times in the Valley. And so, yes, this is different from the late 90s when there was traction and there was consumer enjoyment, but there wasn't step function change in the business models yet. Right. And so here you've got this traction, and you do have what appears on the surface to be very meaningful business models, going quickly. And so, Sam may disagree on that, but like I'm seeing it in our own portfolio.
Yes,
and so it's like,
too.
okay, do you really want to take, you've gone 0 to 5 in the first year, 0 to 10. Do you really want to take a $50 million round?
Right.
At a $250 million valuation? Like, whew, let's think about that for a second, and yet at the same time, don't want to get this wrong. Don't want to undercapitalize in a way when, you know what I mean? Like you set yourself up for, a difficult period if the capital goes away altogether. So, that I'm thinking a lot about, and we as a firm are thinking a lot about, and not sure we have the right answer, but I think you kind of know, we've all had this moment where we're surprised. We're like, wow, I'm surprised that raised so much capital at that price.
Right.
Knowing what I know, I
remember when like Harvey, for instance, Harvey was one of the earliest ones that I remember being like, what is this company doing raising 700 million valuation but they've actually kind of grown into, it seems like they're growing into it, at least from the metrics
really?
I've seen.
Has their business grown into that?
Yeah. I think there was an update on the metrics a couple weeks ago. It wasn't, I don't know, it was worthy of what we would traditionally call a $700 million valuation, but the ramp has been more impressive than I expected.
A lot of these are net negative margin.
Oh, that's the other
by the way,
part.
I guess that's what I'm saying.
Business at all, but a lot of these actually, they're really counting on.
Yeah,
they're really counting on prices to come down.
Yeah, cost of the underlying model to like dramatically drop.
Yeah,
for sure.
I mean, so Tony, back to what you said a few minutes ago about taking a pause from brand, or
I don't take a pause from brand, but from what I was saying, I'm taking a little bit of a pause from pure play consumer.
I guess how are you thinking about that? Is it, if I play this back to you, we're in this moment where AI is taking off in all the ways that we're talking about. We're not totally sure how it's going to mesh with the consumer experience. And the examples that we're talking about are like, Holy Grail Donuts or Flour and Water Pizzeria or, Blue Bottle Coffee. Are you kind of waiting to see how AI affects the, consumer real world hospitality experience in a meaningful way?
No,
what are the
it's
signals you're kind of looking for before you feel like it's okay?
Bandwidth, focus.
I see.
Like,
so it's a pure running a firm question.
Yeah, like the Blue Bottle models of the world, which I think will continue. I mean, they're not, physical is not going to go away. In fact, if anything, it might become more valuable, right?
Yeah.
There is a thesis out there around like,
that would be the contrarian take.
We're all living in these digital universes. We want we want more physical attention. Well, bookstores are on the rise. There's all kinds of, there are all kinds of interesting signs, but I don't know if
You're not going to invest in a bookstore anytime soon.
No. Well, you never say never, but I don't think so. I just think right now it's just like, even I have to catch up and I have to learn a lot really quickly. And, every minute I spend looking at those kind of opportunities is just one or two less pitches I've taken from really forward-thinking individuals that are trying to figure out where the world is headed, right? And
it's wise. It's a wise way to look at it.
I think it's temporary. I don't think it's, like we start talking about things as AI or non-AI. I think pretty soon it's just like, it's going to just be back to being tech. It's like, everything's going to be AI if it's whatever. And we'll get back to the normal classifications of tech and non-tech, right? Mm-hmm. And, there's plenty of good businesses to be built in both categories.
I think it's a wise take because you see this debate going on where people are like, should I be looking for contrarian opportunities that aren't AI right now? And what you're saying is actually, no, you should be spending your time making sure you're fully up to speed with what's going on in the present. And then get back to looking for, if it's deep tech that you're into, or if it's, finding the next great consumer hospitality experience that you're into, you can get back to that. But if you're not up to speed with what's going on today, focus every minute on that. And that's your sort of wisest advice.
It's like music, like, you don't want to be that person. I'm stuck back here in the rock and roll era.
Love
it's
it.
like, you got to listen to a bunch of stuff that feels weird, edgy and not quite right and whatever, but it's a bridge, right? That helps you to get over there. And if you don't continue to push yourself in those directions, by the way, it may not be a bad place to get stuck listening to rock and roll music or just being a four-wall consumer investor. I'm not saying that that's bad. I'm just saying that I think the outsized opportunities here in the short term and what we're supposed to be doing as investors is pursuing those kind of outsized, opportunities. They clearly lay around AI right now. Yeah. It's I don't think anybody thinks it's not the biggest wave we've ever seen. Like,
get into a new genre.
Yeah.
Well,
stop with the rock and roll. Everyone's doing country.
Wait. I've got the great segue for this because I know
Speaking
our time with Sage Tony is almost up. However, I would be remiss not to bring up our pop culture corner, which we usually do at the end of these episodes, Tony.
Do we get to talk about Taylor Swift?
The internet broke this
Speaking
week.
of cross-genre masters.
What happened?
Yeah.
Tony, on a scale of 1 to 10, how big of a Swiftie are you? Let's be real. I'm gathering a 2. Okay. A long pause.
I would have guessed 3.
Really answered that for us.
But I did watch the biography on the airplane the other day. About
this is only like 5 years old, but fine. Okay.
Yeah, okay.
All right. Well,
wait, did it change your opinion of her or no?
Yeah. Maybe understand just how, it's so obvious how savvy she is as a business person. Right.
Well, speaking of brand and marketing and music genres, it's just a classic case study. Every business leader and venture capitalist should pay attention to.
She's definitely a business genius.
But I will tell you, I've read no less than 3 articles about Travis
Doesn't matter.
and
Do you have any
Taylor.
questions for me or
No,
Dave that we can answer for you?
I've read 3 articles in the last 2 days. That's my whole point. Like, I'm not a Swiftie, but I'm
you've
all
been
in.
up on
I'm
it.
curious.
Okay, good.
Absolutely. Come
Good.
on. I mean, this is like the supernova, if we want to put it into AI.
Yes. There we go.
This is the supernova of engagements. I mean,
Totally.
this is it.
This is it.
I mean, here's the real question. Do you think she's going to sing the vows, or do you think he's going to call the plays?
Good one, Tony. Well,
I stole that
I
from
some
some ESPN article
you
or
saw
something.
that on
love
a meme somewhere on your private
I'm like,
Instagram.
I like that one.
All
I'm
I
a
know
huge
is
Travis fan. I'm a huge fan.
we're very excited in the Morin household.
We're massive
we
sports
had
fans. So
a lot
it's
of-
like, we're like
and
weird
music fans.
I mean, Tony, I know you're a big sports fan, but like the people that are both sports and music fans are kind of few and far between in the Valley. So it's an interesting.
I'm definitely both.
Yeah.
Well, we're here for it. Taylor and
Dave,
Travis.
where do you stand on? Where do you stand on the? Are you a Swiftie, Dave?
Oh yeah.
Oh, big time. Maybe bigger than me, Tony.
I'm a massive music person though, Tony. Like I was in a band in high school. I'm like a hardcore music person. So I've always sort of loved Taylor Swift from her singer-songwriter days. So like she was our wedding music, you know.
I love
so
it.
we've kind of
It's true.
we've been along for the whole ride.
I'm so late to the game, but I'm now all about Justin Bieber with Swag. I love that album.
Really? Oh,
Interesting.
See, this is controversial. I didn't like it as much. No, I'm not into it. I feel like I'm not seeing the Justin
haven't
comeback
listened
as
to it
strongly
yet.
as it could be.
I'm on
Oh.
a real Zach Bryan sort of Dead and Co trip right now. Like
Okay,
I'm actually
listen.
I'm like late to the Dead. I really love John Mayer, and so John Mayer is now singing lead for the Dead, and I've been getting into listening to a lot of the live shows that they did the last couple of years, and realizing kind of the magic that's been happening. It's pretty cool. So
John Mayer is amazing. You know, he was one of our advisors at Hodinkee, and so he would show up
Really?
all the
That's
time
cool.
to our Hodinkee board stuff and whatnot. He's a great advocate. Yeah, he has.
Greatest
I think he has
guitarist.
one of the
he's got
best
an incredible
watch
collection. Yeah,
yeah,
totally.
in the world.
I remember
Really?
that. I was a small investor in Hodinkee.
That's his claim
Yeah.
to fame. Oh,
Yeah.
full circle. Taylor and John, I think, dated at
Oh,
one
they
point. She sings a song called Dear John. So there you
She's
go.
not very happy
you
with him.
think
Yeah.
they dated? It's a little bit
He
more
dated
of a story.
everyone. Well, ooh, you
Brett,
want to
she-
spill that tea?
There's more
Not
than
on
one
camera.
song, and she's not happy about it. Yeah.
Yes.
I know she wrote songs about him. She wrote songs, and then there's the Katy Perry feud. I mean, there's
Oh,
all
You
of
guys
this
have to
is
take that
intertwined.
offline. Here's the only thing I want to know to wrap this up. See, I'm going to wrap it up.
Okay. Yeah, you can wrap it up for us.
Do it.
I
We'll
want to know.
talk about Taylor forever.
I want to know who your first concert was.
Oh, it'll
Now, you might
age
think
me.
I'm asking this from a position of strength, but I'm not.
Together or individually?
Individually.
Good question.
Counting Crows.
Ready? I'm aging myself down.
Well, it was Counting
Back-
Crows and Wildflowers.
Okay, and mine is the Backstreet Boys.
Love that.
And
okay.
Me and Dave's first concert together, which was kind of our first date, was the Kenny Chesney concert. We're country music fans too.
Okay.
So.
My sister
I guess-
dragged me.
It depends on which size, I guess. What are you talking? Big concert or small?
Yeah, like,
Does it
like
matter?
when you went to a concert,
Your
not like
answer's fine, Dave. Come on, let's
Okay.
see.
Yeah,
I
your
want to
answer
see
was
what Tony's
good.
going
Counting
to say.
Crows. I think that was yeah. My sister, I'll never forgive her. I love my sister. I have two sisters, one's deceased, but the one who's still alive, I blame her. When I was six in Nashville, she took me to the Donny Osmond concert.
Oh
And
my
now,
God.
every time I get asked this question, because that's a popular question out there. What's your first concert? Everybody is like, yeah, I went to the Rolling Stone. Or like, I was at Tricky.
Yours
I was
is
at
Donny
Tricky in
Osmond.
London. I'm like, Donny Osmond of the Osmonds.
Very
But-
contrarian.
But the first one I bought a ticket to was AC/DC, the Hell's
There you
Bells
go.
tour with
Amazing.
Ted Nugent playing opening act. There you go.
That's a good one.
That's a good
one.
recovery.
We've raised our two boys to be AC/DC fans, so
Oh, yeah.
we're
They
in
love
on that way. too.
Zeppelin, AC/DC.
Gotta raise them right. I'm going to
This
wrap
is
this up.
fun.
Tony, thank you so much for doing this and running over with us. We could have gone on for much longer, but again, you're just such a great friend, partner, investor, all the things.
We appreciate you, man.
You're very wise. I hope a lot of you out there learned a ton this episode. We jumped around quite a bit. If you have feedback, please drop them in the comments. Leave us some Twitter reply, X replies, I should say. LinkedIn, maybe comments would be good too. If you made it this far, you have to post your first concert in the comments. Okay, there we go.
Oh, yeah.
And again, a special thanks to Tony. Thanks to all of our back channel and to all of you out there. We will see you back here next week for another episode of More or Less. Bye, guys.
Amazing.
See you guys later.
Bye.
If you enjoyed this show, please leave us a virtual high five by rating it and reviewing it on Apple Podcasts, Spotify, YouTube, or wherever you get your podcasts. Find more information about each episode in the show notes and follow us on social media by searching for @MoreOrLess, @DaveMorin, @Lesson, @JLesson, and as for me, I'm @Brit. See you guys next time.